Apple was downgraded at Citigroup to neutral from buy over the weekend. In pre-market trading, the stock is below $500 a share. The yen reached an 8-month low versus the dollar in trading on Monday after the Liberal Democratic Party won control in Sunday's election. I'm Lindsey Bell, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the morning call. We're headed right into the last trading week of the year. The futures look like they're flat after a flat week last week that was weighed down by fiscal cliff talks. Scott, how do you think we're going to end the year?
I think at this point we're like middle ground. We're not near the highs, but we're not falling apart. And I think the futures are up a little bit this morning based on the comments by Boehner. I know last week a lot of the world markets continued to rally while we sold off midweek. I do think that Boehner's remarks on lifting some of the restrictions, that he's open to some tax increases on 1 million plus, is helping the market. But overall, there's really not that much to get super excited about right here.
Yeah, and the market showed us that last week when the Fed announced QE, but it couldn't hold the gains from earlier in the week after that. Yeah,
if you look at the chart here, you'll see that technically you had a bit of a push-through failure, which is always a sign to take a little bit of stock off the table, bring down some risk, wait to see what it would lead to. And if you look here at the chart, you will see, after we broke this uptrend that was intact since June 4th, right around 1440, there was your sell signal. Then we had a methodical move all the way down about 7-8% to these lows. Here is your other outside day to put some risk back on. And since then, a nice methodical rally right even through some resistance. And then on Fed day, we broke above the prior day high of 1434, went as high as 1438, and then closed pretty weak. This was a sign to take some short-term profits off the table and then just get a little bit more flexible. And since then, 3 down days, not drastic, not severe, but 3 down days into the moving averages. So I would say right now, short term, I think in order to have any hopes of going back to these highs for year end, we shouldn't get through 1411, and my real line in the sand is around this 1398 to 1403. If we break below this area, in the next coming days, I think that guys are not going to be so interested in this tape. If we hold this area, go up a little bit today, maybe there'll be a few more things to do into year end.
Last week we saw relative weakness in the NASDAQ, and that was partially due to Apple weighing down a number of indices. That stock was down 6% last week. In the sector spotlight, we're going to look at tech, led by Apple. There was concern that in China that the sales weren't so great on Friday. All Things D was out saying that, but then Apple came out this weekend and it seemed like sales were the best ever in China in the first weekend. But they got a downgrade by Citi. So what's going on here? What levels are you watching? Just stay away.
It all depends on your time frame. This stock has rattled many investors, even the most astute investors and even the most sophisticated traders. But all in all, from a technical approach, the signs have been there so many different times, and I don't want to rub any salt in the wounds or whatnot, but from the iPhone 5 launch, where that weekend I remember, with my birthday, I turned 40 September 21st. I came in that Monday. That news came out that the iPhone 5s were disappointing, whatever, and then all of a sudden that's what started the whole decline. We broke the 21-day moving average. We didn't hold the 50. We held the 100 for like 3 days, and if you look at the chart here, there was really never any reason to hold it. This was that top. Okay, and then you move down and try to hold here. That's what developed this head and shoulders top pattern. Then we broke below it, couldn't rally once again at some significant support, broke below that, came to the 200-day, didn't really bounce off that, broke that, and then finally you had a little bit of a bounce right there. Okay, you had that nice outside day that was tradable that finally I said, okay, let's judge this one more time. You had a big move up, some commitment to it, some follow through, and then what happened? Right where people were drawing this right shoulder of the macro head and shoulders format, that's where we failed. Good spot to take some off. And I know for me, I was trailing some, and when we broke this higher level here, I believe right around this, I said, this should not happen. It's no longer a swing trade, where I'm not going to trail it from down here. And then you had this harsh down move that engulfed this entire lower range. Then we hung out in this lower end, and I think we said it multiple times, the longer we stay below, 550, the greater the probability we take out the 505 to 518. Took it out on Friday. We're opening below it now. A lot of things going on. If you look at the macro chart here, here's your left shoulder, your head, the right shoulder that was built in the midst of a nice tradable move here for cash flow traders. And then guys looking to get short. They were waiting, and they had their chance. And now at this particular point, it's hard. It's hard to short a stock after a move from 700 all the way down to 500. Same way doesn't mean that it needs to bounce right here. You could see 486, which is a big level, or 440, but we also don't have to see that in a straight line. So today I come in flat with the luxury of trying to create some cash flow, not looking for a major swing, generational buy. All I'm looking to see is how it handles this zone. If you go back to the chart one more time, you will see here it is. This is 505.58. We are open below 500. If the stock tries to rally and can't within the first 30 to 60 minutes get back above 505, 558, you're going to see some more weakness. You're going to see some more fear, and that could take us through 500 down to 486. If in the first 15 minutes we reclaim 505.58, maybe guys like me will buy a little bit versus the morning low, and then we'll see if it can get into this gap. This is your next area to measure. Now it's like the longer we stay below 518 to 520, the higher the probability some of these longer term targets to the downside get met. But we're in a wait and see basis, and just don't have opinions on our stops. And it's it's been an unfortunate ride for investors who just close their eyes and go underwater.
Yeah, exactly, and it's taking some other stocks down with it. One for sure is Broadcom. It was down sharply at the end of last week on Apple's weakness. Apple is one of their big customers, but they also have exposure to Samsung, Cisco, Amazon, a bunch of other names. And mobile, management told us the week before they expect mobile to grow at a 34% compound annual rate through 2016. So I don't know, this could be maybe a good entry point for a long-term investor, but is there a trade here?
You know what? If Apple finds a little bit of a bottom, I'm sure this will. But overall, I think a lot of people have been trying to buy Broadcom in some of these semis, and the semis just have been overall weaker. And if you look at the overall chart, look at the chart of Broadcom. Okay, this was, what was this, almost a year or so ago, or maybe 2 years ago. This was the high. And look at it since April. Just a methodical mess, methodical channel, just erratic, no continuation. Then you look a little bit closer, and you did have a nice move, okay, off of this lower area, but then, you had somewhat of a push-through failure right here, the same day the market did. So if you sold some after, a nice clean, like look at this pattern, at least this was tight, and this gave you an entry right there, and then you had some follow-through, and then here's your reversal. And you never know you're going to get a move like that to the downside, but if you look at a reversal like this and you take some risk off, you don't have to know. Same way, you have a small ascending channel here. If you were looking for a flag type pattern, then it broke it right there, showing no upper commitment. Here we are back at support. I guess you could trade it verse 31.71, but it's below the moving averages, and I just think it's an avoid. I'm sorry.
Facebook had a lockup expiration on Friday. The stock was down 5%. It didn't do as well as it had in other lockups. And I think you got stopped out of this name on Friday. Is that right? Yeah.
I was trying to trail some. It was holding higher. Last time they had a big lockup, it was different. It was trading down at 20. This time up at 28 and change. You need to see some real buyers. So we said have some stops, try and stay with it. But if it doesn't show commitment, you shouldn't. And the real A+ setup was when it went to 24, held around there, and had a nice methodical move to 28.88. Since then, it was worth keeping your eye on. And you look at the chart here, you will see, this is when the last lockup happened and it ignited. Okay, so that's what helped ignite it move off a lower support. And then this is when I got a little bit excited when it started holding higher in front of this gap, which to me always gives you a good gauge to potentially have a trade. And it had a nice trade, went all the way to the high here, this little red dog reversal. And then this red dog reversal right here didn't lead to much. So I said, let me get back in long and see if we could break above here. We could see higher prices. And then, Friday, you had this engulfing type day, which might not lead to a full breakdown, but I don't have to stay there. This one day just engulfed all these, so that's showing me some power. I am out of it. Some guys will use yesterday's low or Friday's low as a pivot, 26.76. If it breaks and closes below that, you could then see 26.16, and then, you might even see a retest of 24. So at this point, it's got room to the downside, and I guess if it holds this area, maybe it just needs more time. But for me, I don't need to be involved in something that's not clear cut.
Yahoo is a bright spot in the tech space. In October, it broke above its year-long trading range. It continues to move higher. Do you think there's still upside left in this one?
I do think for 2013, it could see 23, 24. And I was holding this for multi-weeks. And I actually got out of this one, so last week, in the midst of that outside day. It just shows you that if you get out of something, you might not get back into it. And although I felt, good exit, but it's only a good exit if you get back into cheaper prices, and I did not. You look at the chart here at Yahoo, and you will see that, really nice rally from 1650, methodical, hugging the 8 day the entire way. So I thought I'd be a little cute into this area. I'm like, I'm out of it. You had 2 downside days, controlled right back to the 8th day, and then now you had a move back up. So for me, I'm out of it. For macro investors or swing traders, you've had no reason how it's been riding this 8th day. You could just stay with it. You go to your weekly chart, and you will see that it's been moving, but overall, there's still some more room to this 22 to 24 area. It's just that I think some of the meat's off the bone here. If you want to trail some, stay with some, but this has been a pretty impressive run by Yahoo.
All right, well, we're going to take a quick commercial break, and we'll be right back after this.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to talk about some stocks that should benefit from the global economic recovery. All of these stocks are owned by Stephanie Link and Jim Cramer in their Action Alerts portfolio. We'll start with Emerson. This is a stock that, it should benefit, excuse me, I can't speak. It should benefit.
It's all right, it's Monday.
It's Monday. It should benefit from its exposure to the emerging markets and also its leverage to the China investment cycle. We're seeing much better economic data out of China, so this could be one for a good long-term play.
Well, technically, I'm looking at it. I don't really trade this one, and it looks pretty good. Nice tight setup. If you look at the chart real quickly here, you will see you have like a mid-level channel that just held higher. This is the lower end. They're holding higher, showing some demand. You have defined resistance right there. So for a trader, that's something that could interest you. Even me, so I think I might put this on my radar. If this can get above and stay above it looks like 53-ish, you're going to see a move perhaps back to the highs. So again, here's your inside channel. Here's where it's holding higher, and we just corrected for 3 days, and this one did not go down. So I do think this is in the cards. It could get a nice trade through this area for some cash flow, and for maybe if you're in a tier 1 as an investor, through this resistance, go for a tier 2 and see if you can create some cash flow like a trader, and then once it moves up, get back down to what you're comfortable with.
MasterCard is a stock that's been really good this year. It's up 32% so far, but Stephanie Link likes this one for a couple of different reasons. Going with the global theme here, there are plenty of market share opportunities for these guys in Europe and other places abroad. In addition, the secular growth trend is good for this one as people move from paying cash to using credit card. We're also seeing that here in this retail time of year, the holidays, people are buying things more online. You got to use a credit card for that.
Yes.
Do you think this one keeps going higher?
This one has been going higher for years, almost. And that and Visa, they've been go-to stocks. They've been acting better than the financials. Every time they make new highs, it's harder to trust. So I know for me, like 2 weeks ago, I tried to be long it. I got stopped out on that consumer report. But whatever, it just shows that you have to know what you can handle as far as the swings. You look at the chart though for a macro swing trader or a macro investor. Here's where it broke out from in September. You did have a pretty harsh move back down to where it held, which was a 50-day moving average right around here. And it's just slowly, methodically going up. Here it tried to break out and just wasn't ready. Just is not a lot of momentum in this tape. So overall, it's trending higher. This was a more gradual trend that was in place from September, and this is more of an accelerated trend. So if you want to try and be long this, you could be long to put a stop maybe in 475, and then finally, if it were to get going again and break above 490, you could see a move to highs. And it might take the first month or so or first few weeks of January, but overall, no one's really taking tax loss selling here, even though they think that the tax rates might go up. So this is showing leadership, and if it's in your portfolio, it seems like you could stay with it and just know your commitment. Here's an accelerated stop. Here's your gradual stop, and use those as your areas, just to know if it changes.
Speaking of financials, we've talked about in the past, and if we can see some real buying in the group here, there's a number of different names that could go higher. One that Stephanie Link bought last week was Goldman Sachs after the Fed's decision to buy more longer dated treasuries and the mortgage-backed securities. In addition, as regulation becomes more clear, that's another reason that these stocks can go higher. But I know that there's a level of resistance around 120 in this that you're a little concerned about.
I'm not concerned about it. That's my action area. You know,
Yeah.
if it gets above there, shorts could be concerned, and that's why I could finally move. I tried it last week with, you know, I'm long some of the other banks. I'm long Bank of America, I'm long JP Morgan. I tried being long Goldman, and it's been lagging a little bit, but the chart's getting a little bit more constructive. You look here at the chart, and you'll see, you know, it is getting tighter. You have this nice little wedge type formation. You take a closer look here, and you will see it's bumping up against somewhat of a downtrend if you were short it. So I would say if it gets above this 120-ish, you know, guys in my office will be looking at it. I'll probably be looking at it for a trade. And then you could see a move back to the highs. So overall, if Goldman breaks above 120, 121 and holds above it, I do think that'll be helpful for the banks and the markets and worth your attention.
Playing on the housing recovery is Weyerhaeuser. This is one of the most profitable timberland companies in the world. They should benefit this upcoming quarter from pricing. It's had a great run though also, and it's tough to see get this one on a down day. So I'm not sure there's a trade here, but if you're in it, you're doing pretty well.
Yeah, this one has been one of the chosen ones. A lot of the housing stocks have been chosen ones. This one's, you know, creating some type of wedge pattern though.
Okay.
So there could be a trade here if you're not in it and you're looking for some type of move or motion. And if you look here, you'll see that, you know, here is your small, you know, your short-term top. And this move definitely got people a bit, you know, battered and bruised. It came down, but it held the 50-day while most of the market went to the 200-day. Quick move back up. It's fighting with this downtrend right here. You know, I guess Fed Day 2, it couldn't get going, but you saw a green day Friday. You know, so this symmetrical triangle, so to speak, is in place. And, you know, for guys that are looking for a stocks in motion, it's got to really get above 28, close above it, and the market has to get a lot stronger for this thing to take out the highs. It's worth being on the radar, and if you are long it, you know, I would say just know your commitment, because if it starts to break below, just say the 27 area, you could see more downside just like you saw last time, because look like what people did right here. But this goes to show you also, look, you had your symmetrical triangle, it broke below. If you get out of the way, you felt good, because look where it went. But if you didn't get back here, you know, it's right back where you sold it. So just know your commitment level and your time frame there.
Caterpillar's another play on the, you know, on China. The stock's been moving higher. It's above an intermediate trend resistance level. So do you like this one here? It hasn't been a great stock for the year. But
No, this has been a horrible one this year, and a lot of people who just want to buy it because it's Caterpillar definitely are underwater, but it's been inching up. I do personally think, you know, Deere, if you go real quickly, is the better setup. You know, it's acting stronger, it's holding in there. You know, traders also aren't having much success here because of the choppiness, but if this were to get above 87, you know, you could see a move to highs here on Deere, and that'll also probably help Caterpillar. If you look at the the difference in charts, this one's at the lower level, below the 200-day. It's inching. You know, inching it's hard for traders to make money when things are just inching. We like wide range bars, we like excitement. You know, there was a small trade here when it got above this 87-ish. And, you know, you just got to see if it gets to the higher end of this channel into the 200-day, does it get rejected by 9107, or does it reclaim it with some strength? So at this point, it's worth staying with a little bit, but overall, this trend in Caterpillar has been to the downside. So at this particular point, Caterpillar has a lot to prove if it's going to show faulty signals for you to stay there.
yeah, let's do some quick hits. We'll start with Win. This got downgraded to neutral from a buy on Friday. It's at this major resistance level. So what do you do here?
I think the casinos are trying to act better. This one, I'll show you the resistance there for a trade. If you look, you'll see that this 115 area is pretty big. So if it were to get above 115, there is a gap from that special dividend play. So this 115, 116 is really good. Let me just take a quick look at MGM. I did sell it on Friday just because I tried to pare down some risk. Here was a really nice breakout. Then you had another additional trade for, you know, a few, you know, some nice cash flow right here, and it's still holding in well. I think, you know, let this pause right around 1150, hold higher again, and this could see 12 to 14, you know, higher prices. So this one's acting better as a trash or treasures trade. You know, guys are asking me why I sold it on Friday. I just sold it because I thought I had too many positions on, and, you know, this was a nice move from that 10 area. U.S.
Steel had a great breakout on Friday. Can it last?
Well, typically you get a day one, and you'd love to see some follow through day two, day three. But the day one was so big, it might need a little time. If you go to the chart here, you know, we had it on off the charts. Some guys in the community made some money there. You know, here's defined resistance. This is why we love defined resistance, because if you get through it, there's power, and that's a wide range bar that traders could look at and try and get involved with. So I am long some of this. I would say through Friday's high of what is this, 24.08. It can continue, but I wouldn't be going in with the same type of size you did for this potential breakout. If you want to just stay with the trade, it's got to stay above this 23 area for it to continue. And then a little bit of a Me Too trade that I'm just throwing in there. FCX been so battered and bruised, and it had a huge gap down on that takeover that they did. But it's starting to fill the gap as if this was very emotional. So I would say above Friday's high of 34-ish. This could inch its way back to 36, and fill at least more than half of this gap. So, if you want to be in the name, but for me, I think it's worth taking a look there.
All right, well, that's all we have time for today. Those are the stocks we've got our eyes on, the industries we're watching, and the level in the S&P 500 that we are keeping our eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.